Welcome to this explainer. So, you're an international auditor, and you've just had a set of Estonian SME books dropped on your desk. You're probably thinking, okay, what exactly am I looking at here? Well, you're in the right place. Today, we're going to bridge the gap between those massive global accounting standards and the actual reality of local Estonian ledgers. We'll get you the exact tools you need to not just survive, but totally crush your audit.
Okay, let's look at the agenda. We're going from the macro to the micro today. We'll cover navigating Estonian accounting standards, when to actually switch to IFRS, recording Estonian VAT entries, software localization and naming, and finally, currency and translation accuracy.
Starting off with Section 1, navigating Estonian accounting standards and really understanding the local framework.
Right at the top, we've got the Accounting Act of the Republic of Estonia, which basically sets the reporting rules based on business size. And for most of your clients, you're going to be dealing with Estonian GAAP. Locally, they call this good accounting practice. Think of it as a highly simplified, mandatory framework for most small and medium entities. It's heavily rooted in the global IFRS framework for SMEs, but, and this is key, it has these strategic simplifications built right in to make local compliance a total breeze.
The contrast in complexity here is honestly staggering. Estonian GAAP is all about a streamlined, true, and fair view. It has way fewer rules and demands vastly less disclosure. But then you look at full IFRS. Highly complex, super detailed, requiring those massive, comprehensive financial notes. By sticking to Estonian GAAP, these SMEs are saving a ton on preparation costs compared to full IFRS, and they do it without sacrificing any transparency.
And Estonia's scale-dependent framework is incredibly flexible in practice. Estonia JP covers most private companies and those famous e-residency businesses. It actually allows micro-enterprises to file completely abridged, simplified balance sheets. It literally strips away the heavy regulatory burden for the little guys while keeping them 100% compliant. Whereas IFRS, well, that's reserved for the big, publicly accountable entities and doesn't usually allow for that kind of simplification.
Moving right along to Section 2, when to switch to IFRS. We need to know the mandatory triggers for complex reporting.
So the million-dollar question, when does your client outgrow the local rules and get legally forced to switch over to global standards? Pay close attention here because this is a strict legal compliance issue. If you are auditing a publicly traded company, a credit institution, an insurance undertaking, or a financial holding company, they have what's known as public accountability. That means no more simplified local GAAP. They're strictly required to use full IFRS for their consolidated financial statements, no exceptions.
All right, Section 3, recording Estonian VAT entries. Let's talk about tax compliance at the operational level.
Let's get down into the weeds of the daily operations and talk about the Estonian value-added tax system. Just recently, as of January 1st, 2024, Estonia bumped its standard VAT rate up to 22%. As an auditor, you are going to see this 22% standard rate everywhere, applying to general sales, imports, and intra-community supplies across all your client ledgers.
Now, to audit this correctly, you've got to understand their chart of accounts. It strictly separates the tax collected on sales from the tax paid on purchases. I know the local Estonian terms look a bit intimidating at first glance, but let's break them down. Output VAT is called Viljun Käibemaks. Try saying that 3 times fast. That functions as a short-term liability payable to the tax authority. Input VAT, or Sisenda Käibemaks, acts as a current asset or receivable. The key takeaway? These are always tracked in entirely separate balance sheet accounts during the month.
Watch how this daily activity builds up into a monthly compliance cycle. It's basically a 3-part narrative. Steps 1 and 2 are happening every single day, crediting output VAT on sales, debiting input VAT on purchases. But step 3, that is your crucial audit trail moment. At the end of every month, the accountant has to post a reversing journal entry to zero out both of those accounts, moving the net balance into a single VAT settlement clearing account. And the final balance of that clearing account absolutely must match the monthly KMD tax return exactly. If it doesn't, well, boom, you've just found your first audit finding.
Let's pivot to Section 4, software localization and naming. It's time to decode the ledger's language. Okay, we are zooming all the way into the micro level now. You've opened up the client's accounting software, but to actually audit it, you need to understand the incredibly strict rules of Estonian localized jargon, because software language files demand absolute consistency. Having both the singular and plural forms correct is absolutely crucial. Getting them wrong leads to a totally fragmented audit trail full of ambiguous documents, making tracking revenue near impossible. And let's be honest, there are few things more painful than untangling a bad translation during an audit.
Consider the essential translations you'll see repeated constantly in the ledger, your cheat code.
Notice how the singular base words shift into plural forms across the software menus. So an invoice is an arve, but when you're digging into bulk reporting menus, you'll be looking for the plural arved. A quote is a hinapakamine. By familiarizing yourself with these specific grammatical shifts, you'll instantly know exactly what type of document you're sampling. No local translator required.
Here's a massive pitfall for foreign auditors: the translation of credit note. You will often see the term kreditkorraldus, which literally translates to credit order. Now, for an auditor, that's a nightmare of ambiguity. Is that an internal instruction or a finalized financial document? Standardizing the books on the term kreditarve, which literally means credit invoice, removes that ambiguity completely. It ensures everyone knows this is a finalized sales correction document, plain and simple.
And you've got to remember this tiny but critical user interface rule. When you're looking for document numbers, like the invoice number or document number, the standard Estonian abbreviation always includes the period, so you'll look for arve with that dot. This guarantees professional consistency across all the reporting interfaces. Actually, if you see wild variations in how document numbers are labeled, that's a glaring red flag of a poorly maintained software environment.
Finally, Section 5, Currency and Translation Accuracy. We'll look at historical shifts and proper denominations.
Let's slot in the very last puzzle piece of the ledger itself, the currency denominations. So, Estonia shifted from the krone to the euro way back in January 2011. Why does this matter to you? Because if you are auditing older SME software or maybe a system that was poorly migrated, you might still spot legacy translation files hanging around. To be fully compliant today, the main denomination has to be updated to the singular euro and the subdenomination to the singular cent, period.
Before we wrap up, here is your definitive cheat sheet for core user interface terminology. When the system refers to the company or the business entity itself, it'll say Enterprete. But if it throws a technical error about the literal database or set of books, it uses enmestic. Checking for unpaid invoices, you are looking for Avatut Curie, which means open items. And if you're auditing inventory, a bill of materials is a materially loetelu. Now you know exactly what the system is telling you.
We're going to end this explainer with a provocative question to leave you thinking. If accounting is the universal language of business, are you absolutely sure you're speaking your client's local dialect? Because as we've seen today, global auditing relies deeply on local translation accuracy. From the macro simplicity of Estonian GAAP down to the precise naming of a credit invoice, mastering these local nuances is absolutely the key to a flawless audit. Thanks for learning with us, and we'll catch you in the next explainer.